Hello, ladies and gentlemen. Greg Mikulowski from ForexLive.com. Today's date is October 2nd, 2023. It is a start to a new week. It is a start to a new month. It is a start to a new quarter. So let's kickstart that week, month, and quarter with a look at some of the major currency pairs. I'll start off like I usually do, taking a look at the euro versus US dollar. And once again, if we look at the daily chart, and not once again, but we will look at the daily chart where the high price from Friday came right up toward the 38.2%, broken 38.2% retracement of the move up from the September 2022 low to the July high. That level came in at 1.06106. And if we go to our hourly chart, we can look at the high price from Friday came up to 1.0616, just above that 10 level. We also tested the 200-hour moving average at the same time, so that was in the way. We also had the 50% retracement of the last move to the downside for the euro versus US dollar. That's from this high to this low right here. So that was in the way, and needless to say, this area right here was also a swing area that the market has been paying attention. So there's a cluster of resistance right here, and the market came down. Where did we come down to? We came right down to the 100-hour moving average on Friday, where the price then sideways into the close. In trading here today, we opened lower, and we tried to move below the 100-hour moving average, with the dollar getting stronger after the avoidance of the government shutdown, but then the price then rebounded back to the upside here, tried to hold above the 100 here and here, but then it gave way finally to the downside here. The dollar's getting stronger as U.S. yields go higher, and that pushed the price back below the 100-hour moving average, tilting the bias to the downside once again, with the next target coming in near the 105.15-ish type area. This level corresponded with this highs and these lows right here ahead of the extremes from last week's trading down here, where again the price again tested tested this swing area down here between 104.84 and 105.33. So we're back to that story of this swing area down here on the daily chart being in play. And indeed, the low price that we saw on trading here today did move down toward the high of that swing area near the 105.33 level. You can see that we're currently trading 105.32 just above or just below that level. So I'm going to put a horizontal line here at 105.33 just to remind us about that area, or the high of that swing area, and it goes down to the 84 level on the downside. So we're in this extreme area where we can expect that there probably will be some support, but and last week the market held this area, moving down toward the low. Here's the 84 level is just below this 87 low that we saw last week. So this whole area right through here is going to be our key support in trading this week. Now, if we continue to move to the downside on the top side, we'll be watching the 100-hour moving average, of course, as resistance now stay below that 100-hour moving average, keeps the sellers in firm control. Let's take a look at the dollar versus yen, and on the hourly chart, this currency pair gapped a little bit higher in trading here at the opening, then rotated back down. The gap higher took the price above recent highs here on this hourly chart, and it was unable to stay above those levels. It came right back down, but then started to re-establish support with the dollar yields moving higher, which saw the dollar yen also move higher here as well, and extend above the high price from last week at the 149.70-ish type area. You can see over the last 2 hourly bars, the price has been able to hold support near that area. So the buyers are trying to make a play to the upside here, just intraday, and really medium and long term. We are trading at new highs here for the year. If we go to our daily chart and take a look at where we stand, the high prices here today are the highest levels going all the way back to this period right through here. It's October 2022. By the way, this is multi-decade high up here, so there's room to roam to get up to that area, but it again is at very high levels here for the dollar versus yen. We are also breaking above this trend line here. This trend line, keep on moving this price a little higher. 149.59 is about where that dissects in trading here today. So stay above that level is more bullish. And this trend line up here comes into play around the 150.69-ish type area up here, connecting highs to here. So we are above this trend line right here, which we went above a couple times last week. So it's nothing new here, but we failed above those levels. So I kept the level in play because there's a number of different points on that line. If we stay above that level, we'll be looking toward the 150 level first, and then the 150.69 level next. Let's take a look at the sterling versus US dollar next, and we'll again focus on the hourly chart here to start off with. And what we saw in trading last week was a rebound off the lows here for the first time in a while here. This thing has been trending to the downside and pretty solid trend to the downside. This leg right here, this is the last leg to the downside because we went sideways through here. This last leg, we corrected up to the 50% retracement on Friday's trade, but found willing sellers against it. Now that's only of this leg to the downside. I mean, obviously the sterling versus US dollar has been moving to the sharp to the downside here, but I put it at that level because the market had consolidated over this 4 or 5 so trading days through here before reestablishing its move to the downside. So now you know the reason why I did that. And we could only get to near the 50% of that move to the downside before we started to rotate to but back lower. We also moved briefly above the 200-hour moving average on Friday, and that was the first time the price moved above the 200-hour moving average. So since for the going back to September 1. So it took the entire month for us to get back above the 200-hour moving average, and it enjoyed its day in the sunlight above that moving average for about 5 hours before rotating back to the downside and moving down to our 100-hour moving average. That's a blue line in this chart. So like the Euro versus US dollar, we're trying to hold the 100-hour moving average, and we did in the early Asian session, or pretty much so, and rotated back toward the 200-hour moving average, but found early sellers against that moving average here and started to rotate to the downside. And the last move lower has taken the price back below the 100-hour moving average, back below this extreme or the swing area ahead of the extremes from last week. So watch this level, watch the 100-hour moving average. If we stay below those levels, the bias is more to the downside. Let's take a look at the daily chart to get our view of where we are in relation to the price action from it. And as you can see, although the market's been trending to the downside here in the sterling versus US dollar, we still haven't reached the 38.2% retracement of this trend move to the upside here that saw the price bottom in September of 2022 to the high price that we saw in July. 38.2 comes in at 120.76. That's going to be a target on the downside here for the sterling versus US dollar this week. Get below the low price from last week, and we'll look to get below the 38.2% retracement. If we're able to do that, that opens the door to the downside for the sterling versus US dollar. So keep 120.76 in your mind this week on the downside. In the short term right now, we're going to be watching the 100-hour moving average at 121.77. So there you have it. A look at some of the major currency pairs to kickstart your week, to kickstart your month, kickstart the new quarter. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.